Good afternoon and welcome to the Mid-Market Pulse on Kalkine Media. I'm James Preston and it's great to have your company. Apart from the latest updates on the Australian share market, commodities, cryptocurrency and much more, I'll also share a special report on why a number of healthcare shares are under the spotlight today. Three healthcare players, MGC Pharmaceuticals, Neurotech International and Telix Pharmaceuticals, have been trending following some important announcements. So stay tuned till the end of the show and we'll make sure to get those updates on those healthcare stocks. But for now, let's get started with the mid-market commentary for today and see how the ASX 200 traded by lunchtime. The Australian share market extended its early gains and hit fresh intraday highs in the afternoon trade amid broad-based buying. The benchmark ASX 200 is trading higher by 48 points, 6 points or 69% to 7,094.5 during Tuesday afternoon trade, with 10 of 11 sectors flashing in green. The rally is supported by gains in technology shares as investors regained a risk appetite and kept inflation worries on the sidelines for the time being. The ASX opened higher today following strong cues from Wall Street, which closed higher in overnight trade. The index has gained 0.4% over the last 5 sessions and is currently 1.09% off its 52-week high. The top performing stocks in this index are financial services firm Hub24 and retail giant Kogan.com, which gained between 4 and 6%. On the sectoral front, Aye-reets is the best performing sector, gaining 1.01% intraday and 2.5% over the past 5 days. Other sectors that are trading lower include Telecommunications Services, Consumer Discretionary, Information Technology, Industrials, Financials, Energy and Healthcare. The utilities sector is also trading marginally lower. Moving on to the top gainers and losers, the best performing stocks on the ASX 200 are Hub24, Kogan.com, Pilbara Minerals, Carsales.com and Seek. Some of the notable losers are Resolute Mining, Ramulus Resources, Gold Road Resources, Fisher & Paykel Healthcare Corporation and West Gold Resources. Well, let's turn our attention to some homegrown stocks. And the share price of Viva Leisure rose just over 2% to $1.97 a share after health club chain introduced a bi-monthly reporting format to inform its shareholders on its trading status and other relevant information related to business operations. The Canberra-based fitness club and aquatic facility operator has also released earning guidance for financial year 2021 with the full year results projections warning that its performance could be impacted by higher costs. It expects revenue to be in the range of 81 and 83 million, registering a growth of 25.6% to 31.2% over the first half of the financial year. Shares of Aristocrat Leisure have climbed 2% to $41.54 after brokers Citi and Goldman Sachs upgraded the stock following its robust first half result for this financial year. While Citi has increased its price target from $44.5 to $46.6, Goldman Sachs has raised its 12-month target price from $39.53 to $42.3. The share price of Dr. Care Anywhere Group gained as much as 9.9% to $89 after the telehealth firm stated it has signed a head of terms with Newfield Health, a UK-based private healthcare organisation. The deal is to develop a digitally integrated virtual and in-person primary care service. Shares of Cenex Energy rose as much as 3.6% to $3.16, its highest levels since the 10th of May 2021, after natural gas producer announced the appointment of Simon Eleanor as the Chief Financial Officer of the company. Z Energy has announced it has entered an in-principle agreement with Refining NZ, a New Zealand-based company, to transition the refinery to an import terminal system. The 10-year agreement is a non-binding one and is likely to deliver flexibility, pricing transparency, and most importantly, reduce the environmental impact. It'll also help decreasing the volatility in Z Energy's earning and release working capital from the supply chain. Following the announcement, shares of Z Energy rose 1.3% to $2.450. Infratel today announced offering unsecured, unsubordinated fixed-rate infrastructure bonds for New Zealand investors. The interest rate is fixed at 3.6% per annum for the entire bond term, and bonds are to be listed on the NZX debt market. Airtasker on Tuesday revealed that it has successfully raised $20.7 million through a fully underwritten share placement to investors at $1 per share. The company has issued around 20.7 million new fully paid ordinary shares. Boosted by the development, shares of Airtasker climbed 12.5% to be sitting just above 1.2 Australian dollars. Plenty of positive action for Aussie stocks, but there's also a lot happening in the commodity space, and all the details in just a moment. Stay with us here on Kalkine Media.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Welcome back, and if you are just joining us, very good afternoon to you. I'm James Preston, and you're watching the Mid-Market Pulse on Kalkine Media live from Sydney. Let's take a look at some commodity market updates. Crude oil futures were higher during mid-morning Asian trade amid speculations that sanctions on Iran may not be raised. August delivery Brent crude oil futures rose 0.28% to just over $68.5 per barrel, whereas WTI crude oil futures for July delivery traded at $66.19 per barrel, up 0.21%. Driven by higher oil prices, energy heavyweights Santos, Woodside Petroleum, Beach Energy and Viva Energy Group are all trading higher. In the bullion market, gold prices retreated on Tuesday, with the spot gold price falling by 0.37% to US $1,873.84 per ounce. Index heavyweights Gold Resources, Remulus Resources, West Gold Resources, Northern Star Resources, De Grey Mining and Resolute Mining were all trading in the red. Iron ore stocks such as Fortescue Metals and Rio Tinto rose over 1% despite the fall in iron ore prices. The iron ore prices were down by US $11.85 or 5.9%, trading at US $188.25 a tonne, according to the S&P Global Platts. Moving on, and a mixed result for our currency, the Australian dollar trading higher but bond yields falling. The Australian dollar, which is a commodity price sensitive currency, is trading higher by 0.05% at just under 0.7 Australian dollars. On Monday, it ended up by falling to around 0.33% to just under 0.77 Australian dollars, should I say. The currency has been trading between Australian 0.76 and 0.78 since the 15th of April. Soaring commodities prices have prompted China's government to curb unreasonable cost increases. Australian 10-year bond yields are down 0.85% to 1.638 on Tuesday. And now let's turn our attention across the Pacific, and Asian stock markets are trading mostly higher on Tuesday, following a strong finish at Wall Street in overnight trade, as Federal Reserve officials sought to soothe concerns about inflation. Japan's Nikkei 225 was up 0.6%, while China's Shanghai Composite rose 0.7%. Singapore's Straits Times also gained 0.5%. Hong Kong's Hang Seng soared 0.85%, while Taiwan's Taiwan-weighted indices rallied to 1.5%. Meanwhile, New Zealand's benchmark S&P NZX 50 traded lower by 0.45%. As ever, there's news in the chaotic world of cryptocurrency, and we'll take a look at that in just one moment right here on Kalkine Media.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. Kalkine TV.
Good afternoon, James Preston with you live from Sydney on Kalkine Media. This is the Mid-Market Pulse. And between the memes, tweets and eccentric billionaires, there has been a recovery for crypto. The cryptocurrency market regained some ground after Tesla CEO Elon Musk tweeted that he has talked with Bitcoin miners in North America and discussed energy usage transparency. Following Musk's tweet, the price of Bitcoin, the largest cryptocurrency by market value, rose as much as 19% in the past 24 hours. Bitcoin rose to hit a high of US $39,966.88 and was currently trading at $38,643.93 US dollars, up 9.4%. Ether, the second largest crypto, rose by 24.7% to US $2,651.73, while the Shiba Inu-based meme currency Dogecoin was trading higher by 19% to just under 0.35 US dollars. Finally, the special report everyone's been waiting for. Why are ASX healthcare shares MXC, NTI and TLX under the spotlight today? Well, the ASX 200 opened higher today and we're up 48.7 points or 0.55% as of 12:08 p.m. Australian Eastern Standard Time. Three healthcare players, MGC Pharmaceuticals, Neurotech International and Telix Pharmaceuticals, have been trending following important announcements. At 12:08, MXC shares were trading at just under 0.05 Australian dollars, up 2.04%. NTI shares were trading at Australian $0.058 and Telix shares were trading at $4.385, up 9.62%. Other healthcare shares performing well on the ASX include Invion, Nanoluz and Ecofiber. And on that note, let us dive deep and discuss updates for three ASX healthcare players, MXC, NTI and Telix. First ASX healthcare share, MGC Pharmaceuticals, provides progress report for Symmetra ATM, Cani-Epal and Cognican. MGC Pharmaceuticals has provided a progress report on its major clinical trial programs planned for 2021. The company disclosed that its primary clinical trial program for 2021 continues to progress well, including the imminent initiation of Symmetra ATM Phase 3 and Cani-Epal Phase 2b trials. Furthermore, MGC Pharmaceuticals disclosed that the Phase 2 clinical trial for Cognican at the University of Notre Dame has already recruited 21 of 50 patients. The interim result from the study are anticipated in the fourth quarter of 2021. All three trials are well funded following the successful £6.5 million initial public offering, fundraising and London Stock Exchange listing back in February of this year. Now, before I take you through the next two healthcare shares, it's time to take another quick break here on Kalkine Media.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. Kalkine TV.
Good afternoon and welcome back. James Preston with you, and you're watching the Mid-Market Pulse on Kalkine Media. Now, moving on to the next ASX healthcare share, Neurotech's NTI Dulce strains demonstrate potential benefits for MS management. Neurotech International recently completed the initial in vitro studies conducted in partnership with the Neurodevelopment in Health and Disease Laboratory at Aye-reets University. And the study results have demonstrated that NTI and Dulce strains were found to be substantially more potent than CBD alone in suppressing the production of inflammatory neuromarkers for multiple sclerosis disease management. The results from the in vitro studies reconfirm the powerful neuromodularity, neuroregulatory and neuro-anti-inflammatory properties of the novel NTI Dulce strains compared to CBD alone, which is limited in its cellular activity. These preclinical studies will pave the way for further expansion, as well as analysis of other neuromarkers involved in the management of multiple sclerosis disease management. Moving on to the next ASX healthcare share, Telix Pharmaceuticals products have demonstrated favourable safety in patients with systemic amyloid light chain amyloidosis. Amyloidosis, which is a rare disease caused by the buildup of an abnormal protein, is one that scientists have been looking to get ahead of in the curve in terms of treatment for some time now, and Telix Pharmaceuticals have updated the market that its bone marrow conditioning investigational candidate, Telix 66, has met its study objectives. The study candidate demonstrated the initial safety profile in patients with systemic amyloid light chain amyloidosis, also called amyloidosis AL. The targeted radiotherapy for AL amyloidosis trial, also called TRALA trial, is a phase 1/2A trial, is evaluating the safety as well as the toxicity of Telix 66 as the bone marrow conditioning agent. Notably, Telix disclosed that its bone marrow conditioning investigational candidate, Telix 66, showed a favourable safety profile and was found to be well tolerated in all patients. Furthermore, the company disclosed that the findings from the TRALA trial suggest that Telix 66 may provide a new method to bone marrow conditioning in AL amyloidosis patients. Well, that's all we've got time for on the Mid-Market Pulse. Hope you enjoyed the show, and make sure to stay tuned to Kalkine Media for more live market updates. We'll be back with more news on markets, economy and diverse themes and sector. I'm James Preston for Kalkine Media.